As we approach the end of the tax year, now is a vital time to consider whether individuals have maximised use of the allowances and exemptions available to them. Interestingly, there were no changes to the rates of income tax or capital gains tax payable in the next tax year in the autumn statement. However, a fundamental change was that the income tax additional rate band will reduce from £150,000 to £125,140. Those with income of £100,000 or more are already impacted by the gradual removal of the personal allowance. Basically, for every £2 of income over £100,000, £1 of the personal allowance of £12,570 is lost and is completely lost once total income is £125,140 or more. For income between these two bands, you are effectively paying 60% tax. The reduction in the additional rate band will no doubt mean that more individuals will find themselves paying more income tax as a result, and so there will be greater need for advice. Individuals can consider, for example, making pension contributions and/or making charitable donations, or investing in investments which provide income tax relief against their liability. Individuals should also ensure that they are maximising use of the income tax personal allowances available to them. For example, the personal savings allowance for savings income and also the dividend allowance, which is currently £2,000 but will reduce to £1,000 from April 2023 and a further reduction to £500 from April 2024. Restructuring investments to maximise use of the dividend allowance in the current tax year may be something to consider for certain individuals. Those who are currently not able to use their full personal allowance because their income is below the personal allowance may also be able to transfer 10% of their personal allowance to a spouse or civil partner, provided that their spouse or civil partner pays tax at the basic rate. This form of planning enables couples to save more income tax between them. Other planning in this area will involve ensuring that ISA subscriptions have been maximised where possible. Pension planning should also be carried out, and also consideration can be given to using other tax-efficient investments. From a personal tax perspective, another area to explore is the use of the capital gains tax annual exemption, which is currently £12,300 but will reduce to £6,000 from April 2023 and will further reduce to £3,000 from April 2024. This reduction will mean more and more individuals will be subject to capital gains tax, and so again it is worth looking at their current investments and seeking advice to ensure that the annual exemption is fully used, as it can't be carried forward to the following tax year.